I take it you see a looming sort of balance in supply and demand that will keep prices sort of roughly where they are today in the $80 a barrel area, or am I misunderstanding?
Tyler, actually, we are more on the constructive side when it comes to energy, because we see three factors that could push prices higher. First, we think that at some point over the next 2, 3, 4 months, China is going to start reopening its economy, as we've seen already in Hong Kong, and that's going to lead to a big surge in domestic demand for mobility, but also international air travel demand within Asia. And globally, that's going to drive that consumption up. So we expect Asia to essentially deliver almost 90% of incremental demand growth in 2023 in terms of global incremental global consumption. Second element here is really around substitution. We've had very high natural gas prices in Europe. We have record high thermal coal prices, and we believe there'll be substitution into oil because, again, when coal is trading over $100 a barrel of oil equivalent, and residual fuel is trading in the 60s, actually that means that oil is a lot cheaper in power generation and just generally across the board compared to other fuels. And the third element here is Russia. There's an oil price cap coming, and we believe there's a meaningful risk that Russia will reduce supply in response to the price cap that the U.S. and Europe are trying to impose on them, to essentially try to curb the amount of revenue that goes into Russia. And they've already played that game in gas, and they could very well play it in oil.
So I like your three-legged stool here that, number one, China and Asia will come back. That will bolster demand. Number two, there'll be substitution away from nat gas and coal and into oil. And three, that Russia may reduce supply in response to price. Let's take them one at a time. Let's stipulate that China comes back, but let's also remember that it may well be that the rest of the world is in a serious recession. Yep. So does one cancel out the other?
Well, again, the downside risks I was going to add are obviously recession on the demand side, and then the second one I think is an Iran deal, although that looks less likely now after both European and U.S. diplomats have essentially argued that Iran doesn't seem very willing to move forward. So really, your key downside risk is recession, Tyler. And look, under historical demand contractions, we've seen recession to the tune of 500,000 to 1 million barrels a day contractions relative to trend in developed markets. That's about between 0.5% and 1% of a market that's around 100 million barrels a day. And today, Russia is now more or less producing 11 million barrels a day. So if we were to see Russian supply drop by 2 to 3 million barrels a day from the current levels, we could actually more than offset that. And again, on the demand side for China, you were asking about that. We think demand probably expands. Remember, this year, 2022 is the first year in 20 years where Chinese oil demand has actually contracted, and it contracted by 2.5% this year. So it's kind of a unique year, and we think that going into 23, we'll see demand above the levels of last year.
Shepard Smith here. Thanks for watching CNBC on YouTube.